If you were looking for financial freedom and passive income to be out of that rat race, and then meanwhile you heard about dividends and you wanted to know more about them, well, then you've landed on the right video. You're going to remember this video for the rest of your life. Because if you follow this advice, then you'll be able to quit your 9-to-5 job in 3 to 5 years max and live as per your wishes, just like me. Remember that famous quote by Warren Buffett when he said, "Someone's sitting in the shade today because someone planted a tree a long time ago." By the way, I too started with just $200 a month in investment, and with some lucky and timely investments, now I receive approximately $1,900 per month in dividends. I just got lucky and started early, but now's your time to start to learn and earn some serious cash. We all value our time and independence more than anything. No doubt having money is super cool, but it is ultimately what you can pick and choose every day so that you can live your fullest. You can work 9 to 5 every day and live your life, or you can make some smart moves and still live up to your full potential by receiving passive income. This is all about long-term wealth. Therefore, we're not focused on a lottery ticket. In this video, we're going to be talking about the top 10 dividend stocks that every investor must have in his or her portfolio. Some of these companies have huge growth potential and still provide handsome dividend yields. Also, we're going to see how these are diversified so that you don't have all your eggs in the same basket. Our focus will be on 2 things for this group of stocks. This is exactly like when you build your house. It must have a firm foundation, not sand. If hard times come and your foundation isn't strong, you'll lose everything. We're seeing all this during the downturn of the market where rookie investors are losing their hard-earned money. So, let's begin with the top 10 dividend stocks. Watch completely, and then press the like and subscribe button so you can watch more videos like these. Number 10, Procter & Gamble, ticker symbol PG. This company provides branded consumer packaged goods to its consumers around the globe. And they have a rock-solid business model proven to survive recessions, crashes, and market panics. If you look at a 27-year price performance, you'll see an ever-increasing trend. P&G has increased its dividend nearly every year for the last 66 years. This is an example of pure consistency. This makes P&G to be the dividend king. The majority of people don't understand what is dividend king. It's an entity that has increased its dividends every year for more than 50 years consecutively. On the other hand, a dividend aristocrat is one who has increased its dividend consecutively for more than 25 years. If you're looking forward to building long-term wealth, then your portfolio must be a mix of such healthy companies as a foundation. P&G is in the consumer staples sector, having a current price of $140. Their dividend yield is 2.6%. This implies that if you invest $10,000 in their stocks, you will annually earn $243. But here's the catch. When you invest in such a company which has raised their dividends every year consecutively, you do it at a certain dividend yield. However, the longer you stay invested with these companies, the more the dividend's worth and the more payment you get. Imagine having invested $1,000 in P&G. Your amount will have more than doubled, and you will have received handsome dividends with no extra effort. Remember the golden rule by Warren Buffett when he said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." By the way, I make money every week on my P&G shares by trading options on the shares I hold. To learn options trading, check the link in the description or watch the important announcement at the end of this video. So let's keep going. Number 9. Ninth on the list is AbbVie Inc. Be it a time of recession or just any time, it's always important to have healthcare stocks in your portfolio. AbbVie separated from the parent Abbott Group. AbbVie has outperformed the rest of the Abbott business ever since. It has pressed harder to keep its product pipeline full of profitable treatments. This includes its Freestyle Libre, a glucose monitor for type 2 diabetes patients. It's assumed to hit sales of $4 billion this year. It doesn't matter what's happening in the world in economic terms, people will always need such products. This company has also enhanced their dividends every year for more than 50 years, with a current price of $146 and with a dividend yield of 4%. That means if you invest $10,000 with their stocks, you'll earn $369 annually. like I mentioned before, every quarter and year, your investment and dividend income will increase. Number 8. Just like healthcare, the energy sector is consistent as well. This company is ExxonMobil, and they've been raising dividends for more than 40 consecutive years. Considering solar energy and electric vehicles are gaining popularity, oil and gas companies like ExxonMobil are reaching a tough decision. Then again, looking at the issues with the power grid, it can safely be said that oil and gas are not going to completely go away. ExxonMobil has a current price of $115. Some exciting developments are coming. The management goal is to double cash flow, and that's finally becoming apparent to shareholders. Investors can bet on more growth after that. By the way, management is exploring for more large projects that move the needle to add to the ones already discovered. The Guyana project has the potential to add 50% to current production levels in the next decade. So despite all the doom and gloom in the stock market, the share price of Exxon is on the increasing trend line from the last 12 months, and dividends are also increasing. Those who invest timely in this will hopefully have returns in 3 to 8 years max. Number 7, Johnson & Johnson. Everyone's aware of this company. We all use its products on a daily basis. Remember, these are the companies that are going to build generational wealth. Warren Buffett said that when we own portions of outstanding businesses with outstanding management, our favorite holding period is forever. Therefore, we must look for the companies that we can hold on to forever. And Johnson & Johnson is the perfect name in this regard. It is among the 10 largest stocks that Wall Street holds. Also, it's one of the 2 U.S. corporations with the top AAA credit rating. Microsoft is the other one, by the way. It's raised its dividends for more than 60 years. It possesses dominant consumer health businesses, including Band-Aid and Tylenol products. Moreover, medical devices, high-margin drugs, and etc. The stock is deeply embedded in the healthcare system. Unfortunately, it's natural that people will fall sick, and hence they're going to need these products. Johnson & Johnson is the king of the health sector with a current price of $168 and a dividend yield of 2.69%. But again, every year the stock price increases and the dividends too. For $10,000 in their stock, you'll earn $257 annually, plus any capital gains. If you look at the price, the stock price is on an ever-increasing trend. Number 6, Target. In addition to what you need to keep in mind while looking for dividend stocks, you need to see if the company has a competitive advantage. Do they have a strong customer base that will shop with them no matter what? Well, Target's the best example of that. Well, not only is their dividend continuing to grow forever, but their share prices will be growing phenomenally over the next 20 to 25 years. In addition to 50 years of dividends, Target's earnings per year over the next 5 years are expected to grow at 19.6%. Target is serving the consumer discretionary sector. Its current price is $168. It's down 20%, which is a lot. So this is the perfect time to scoop up the Target stock, as its future is bright and American consumerism will probably recover really quickly in 2023. It has a dividend yield of 2.5%. Number 5, Realty Income, ticker symbol O. The company confidently posted its 631st consecutive common stock monthly dividend, boasting a 4.4% dividend per share. The company holds and operates a very well-diversified property portfolio, which includes over 11,000 properties lent out to more than 1,000 customers, with occupancy rates approaching 99%, and the end industries are very diversified. Of these larger names, many of them show up more often as a tenant. Names like Walmart, Dollar General, Walgreens, FedEx, Sainsbury's, CVS, Tractor Supply, Kroger, and many others make up between 1% and 4% of annual rent. Realty Income is a well-diversified portfolio, and it managed to survive the 2001 crash, the 2008 crash, and the 2020 crash. Its earnings continue to increase in all of the market and economy crashes, so you can expect increased earnings and rising dividends every year. Number 4, Prudential Financial, ticker symbol PRU. Just like healthcare and the energy sector, financial sectors are yet another solid one for you to have in your portfolio. Whenever it's about the financial sector, people usually think about investment banks. However, Prudential is more reliable of an option in this sector. They provide insurance, investment management, and other financial products and services. There's not much potential for huge home runs when you're facilitating small businesses to manage their 401k plans or providing disability insurance, but at the same time, there's far less chances to be bumps in the road, as insurance remains in high demand during economic turmoil and in times of economic stability. So, Prudential Financial is a reliable source of regular income in your portfolio. The current price of Prudential is $103 with a dividend yield of 4.6%. They've enjoyed dividend growth for the last 13 years. Price is expected to increase, and with its dividends as well, due to its increase in earnings. Number 3, Starbucks. They have a strong customer base who are not going to switch to someone else. Currently, they have nearly 35,000 stores around the world. They are the premier roaster and retailer of specialty coffee in the world. They are serving the consumer discretionary sector. Their current price is $109 with a dividend yield of 2%. Against $10,000 investment, you would earn $215 annually. No one has to convince them about the fact that Starbucks is there to stay. The reason it's perfect for investment in 2023 is because it's really down right now, but its sales and earnings are increasing. Remember the saying of Warren Buffett, the right time to buy is when everyone is fearful. It will continue to increase its market share worldwide. The US economy will get stronger, and thus the earnings of Starbucks are expected to grow from here, and with dividends too. Number 2, Lowe's. Why are we interested in the home improvement industry? Well, it's because the average age of a home in the United States is 37 years. That means a lot of things need repairing. Therefore, home improvement will continue to soar. Lowe's is one of the favorites in this regard. It has 5 years of annual expected returns of 12.6%. It's the second largest retailer in home improvement in the United States after Home Depot. It has a current price of $202, down almost 10% by the way. It has a lower dividend yield of 2%. That means you'll earn $200 against an investment of $10,000. However, its price performance history is unmatched. You can expect double-digit growth over the years to come because it's a consistent company. If you're ever shopping for anything for your house, it's either going to be Home Depot or Lowe's. They are working really hard to understand demographics, and they offer incredible customer service to their customers. That's what's going to keep their customers coming back to them again and again. And these are the 2 reasons why I want to keep them in my top list of investments. And finally, number 1, PepsiCo. This is the company in the food and beverage industry that generates $82 billion annually. Its brands include Pepsi, Frito-Lay chips, Mountain Dew, Tropicana orange juice, Gatorade, and Quaker Foods. This year marks its 50th consecutive year of dividend growth, and thus, it's a dividend king. Their current price is $170 with a dividend yield of 2.7%. This means that if you invest $10,000 in their stocks, you will annually earn $255. But over the past year, its price has increased by 700%, and the same goes for its dividends. They are highly innovative and creative, serving the consumer staple. They're always hitting the top trends, and they're working hard to get the younger generations on board. Their mindset is all about working on the long term, and this is what we need when we want to invest in companies forever. Now, looking at the fact that 2023 is going to be a volatile year, you need to make sure that you don't make any crazy decisions. Investing in all 10 of these mentioned companies is safe. Invest wisely, and invest with the money that you don't need for at least the next 5 years. This is the perfect time to invest in these companies.